Afternoon, Chris. It's the 1st of August. How are you doing?
Yeah, very well, thanks. Very well. Yeah, 1st of August, where did that come from? I know that, it was just the other week, it seems, that we were talking about the end of the first half of 2023. And yet here we are, already a month into the second half. So life and time always moves quickly.
It does, but on reflection, I've certainly felt that July was a positive month, certainly from stock market's perspective. We saw some news coming through the channels that inflation was certainly cooling here in the UK, the US, and Europe. What was your take on July?
I think that is absolutely correct, Rob. Inflation is starting to be not as high as it used to be, which is good. However, what we did see though were higher interest rates still. We had in the last week or so, we've had higher interest rates from the European Central Bank and the Federal Reserve in America. We saw some interest rate increases by the Bank of England a few weeks ago. And unfortunately, as we speak in a couple of days' time, the likelihood is they're going to raise interest rates again, which is interesting. And it's certainly something I personally am struggling with a bit because I'm finding it hard to justify. And I'm wondering whether in a few months' time, they'll regret it. But it seems short term that central bankers are deciding we need to raise interest rates a little bit further. But at least what we're also seeing is better global growth. The IMF, quite well known for sort of thinking about the global economy, not always correctly, I should say. But what they've said in the last few weeks is that global growth is going up a bit higher. Even more important, in my opinion, is the quarterly earnings season, which is where lots of different companies come and give their updates. And actually, not every company is saying it's marvelous. They're just saying, though, it's workable. It's not too bad. Things are making some progress. And that's not just in very ordinary sectors, in some quite complex ones as well, or areas which have been struggling at various points over the last year or so. So if you put it all together, your observation, Rob, that equity markets generally had a good July is absolutely correct. And you can see the justification for that. By contrast, bond markets, they struggled a little bit more. They were a bit more mixed. And that's what you tend to see when you have things like interest rates still being increased. But my guess is, as we look across the rest of the second half of 2023, prospects for equity markets still look, I think, workable, still look good. There are sort of opportunities there. But I think for bond markets, my guess is actually we'll be moving towards that time when central banks are even saying, well, maybe we should be holding our interest rates now. Maybe we should be not making so many upward increases. And my impression is that will probably start to assist fixed income markets. So for investors across different asset classes, I think there are sort of opportunities for the rest of this year. So I've remained, as always, I guess I'm a sort of an optimistic kind of guy generally, and the glass still remains half full. There are still opportunities there for investors. The key is, I think, is to remain involved. If you're not involved with financial markets, then you can't participate from some of the medium-term opportunities they can give you.
Absolutely. It's been interesting on the interest rate fronts that we've actually seen mortgage lenders in the last week or so reduce their rates. So clearly they're seeing past what might be another little hurdle coming along in the next few days from the Bank of England. They're seeing past that by by what they're saying anyway, and what they're signaling with reducing interest rates. So yeah, it's going to be interesting to see how that pans out the rest of the year.
It is. I think that also reflects a couple of other things. The banks, as we can see, there have been some interesting stories about the banks in recent days and weeks, of course, as well. But generally, banks are under a little bit of pressure. And not just because of some of the headlines, but because of general day-to-day pressure. We have lots more alternatives for our bank accounts, be it to borrow money or to put our money in deposit accounts. There are different options out there. So consequently, I'm not surprised to see that mortgage rates are starting to just maybe edge down in various places. Because if they want some business, they're going to have to compete for it. And competition, as we all know, tends to lead to things like some lower prices. So no surprise for me there, but it doesn't mean, though, that house prices are suddenly going to be marvelous again. As we've talked about before, house prices have many drivers to them. And the first priority should always be, if you're thinking about a house or owning a house, is for it to be a place to live, not an investment per se.
Yeah, it's quite topical, that, Chris, because I shared this morning a tweet about the Nationwide and their stats showing that I think it was 3.6% from memory that they've seen house prices drop over the last 12 months, and the quickest, lowest reduction since 2009 that they've said. So I think we've been calling that for a little while now, though, haven't we? Probably well over 12 months when we started to see interest rates go up, that property, certainly around the pandemic with the stamp duty cuts that we saw, had a bit of a good time, maybe too much of a good time. And it just feels like the bond market, like interest rates and maybe equity markets, just coming back down to the normals again, where hopefully they're a little bit more workable for the average investor.
Absolutely. It's not anything, certainly any of us who've been around for a little while haven't seen before, because key is, as always, is to try to understand what your medium-term priorities are, hence what is the important way to be focused, pay your bills, keep on making some investments, and because ultimately pensions are important. If you don't have a pension, I'm afraid from a medium to longer term perspective, you're not going to be in a smart position for your general maintenance of your lifestyle and related. So I think some of the movements as the 2020s move on, where perhaps investors are seeing that it's not like the 2010s where many areas were performing extremely strongly or well. It's a bit more mixed. And consequently, you've just got to be smart and wise and careful in your choices, and aware of the fact that not everything can be marvelous. But does it still make sense to be an investor? Absolutely, because you've got to play that medium-term game.
So if we park inflation then, Chris, what's the biggest threat for the coming months and, to get us to the end of the year in one piece? What's the biggest danger?
I would say, okay, we've always got two changes or two concerns out there, haven't we? One is inevitably geopolitics. I mean, a sort of a concept which has become, once again, in the last 18 months, 24 months, has become more of an issue. There is still, sadly, uncertainty and unknown aspects around the conflict between Russia and Ukraine, sadly. And clearly Mr. Putin can do us all some common sense there by making some sensible decisions. It remains unclear whether he will or not. That remains an uncertainty. And as you may have seen in other parts of the world, there's been a coup in part of West Africa. We'll see how that sadly progresses as well. But again, you're always going to have some geopolitical concerns out there. Again, nothing that, if we push it back 10 or 20 years, we haven't seen many times before, but something which investors have to be just aware of, some potential volatility aspects there. I would say, though, the major probably issue to think about is just, again, being aware of how a warmer backdrop, sort of the weather backdrop for us all, how that can impact our day-to-day lives. And it's not just because if the weather is very warm or very cold. In fact, sadly, in most of the UK, it's been a little bit cooler than normal over the last month or two, whilst by contrast in southern Europe, it's been very warm. And that's been true in other parts of the world too. So issues and changes with weather patterns do have a big impact ultimately on things such as supply, on whether sort of costs for companies and ultimately for ourselves are impacted. So I think just some awareness there of how that is impacting the world is always also required. I think it will be workable in the sense that for this year, things like supply chains have already made lots of the distribution requirements for the sort of the pre-Christmas period already. I know that seems a long time away, but believe me, a lot of that has already occurred. It's going to be something I reckon we're going to have to think about a lot more in 2024, when hopefully some of the geopolitical issues have gone away. The inflation story will have moved on to a different level again in a positive way. And we're left with that discussion again about, well, how should we be thinking about climate change, weather patterns and related? How is that going to impact not just our day-to-day lives, whether we need an umbrella or something else, but something a bit more practical about what about the costs on food, the impact on economies, growth levels, and related. So I think that's probably going to be something which there's a lot more debate about. I'm still finding it fascinating to think that the next big climate change discussion in November is going to be in the UAE, which is a fascinating place for there to be a climate change meeting, mainly because, as everybody knows, the UAE, with much of the Middle East, is a very important over the last 20, 40 years. supplier of oil and gas, among other commodities. Fascinating place to have a big global discussion about such matters. Very relevant too.
Yeah, it's going to be interesting, isn't it? All those private jets flying into the UAE to have those meetings. But I certainly feel that the climate change topic is firmly on government's agenda now, and I probably feel that probably at some point down the road there might even be a carbon footprint taxation system going to be put in place at some point. So yeah, yes. Interesting where it develops. So very good. Well.
And of course, the other thing, which I almost didn't say, but should have really said, and it's actually relevant to what you just said, Rob, in terms of climate change and government policy, is that, and I'm going to say this quietly because I know it's going to worry a few people, next year we've got elections in the US and almost certainly in the UK as well. And I know some people love elections and some hate them, but they're coming. I'm sorry to say it, but they are coming. And so there's that also to have a think about. So yes, I think when it gets to next year, maybe we should leave it until then, probably would be the best advice.
Yeah, 2024 is going to be an interesting year, isn't it? So let's see what happens. But yeah, thanks very much for the roundup, Chris. Great to chat to you. We'll be doing it again in September. And then, yeah, a few weeks later, it'll be Christmas. So all good stuff.
Absolutely. The key is to enjoy the summer, not just when you see it, but for all the time. And then think about the autumn and the winter when we get a bit nearer to them.
Brilliant. Thanks, Chris.
No problems. Bye-bye.